Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 26th of January. Starting off with the FTSE 100, which backed off record levels that we had for much of the week, and I suppose the close just above 8,500, quite near to the old May resistance at 84.74. We want to see the market stay above 84.74 and then hopefully push higher to the top of that channel there, or at least the initial channel there, 87.20 by the end of next month. If we do break down, then I suppose the 8,400 area would be the logical area, as that was, apart from May, the resistance for this market. Moving on to the DAX, and here the picture of, the market hitting our rising trend channel there, the steep one there from back in October. The level there around 21,500, still looking with the top of that channel as high as 22,000 by the end of next month, although obviously this looks a little bit overstretched after gaps to the upside that we've had. On the downside, initial support there just above the 21,000 level. Moving on to the Dow, and here the picture that of consolidating most of the recent gains. In fact, we had the bear trap gap reversal, and as long as we're above the 50-day line there, rising at 43,600 now nearly, looking for at least a retest of the December peak, record peaks there, just through 45,000. Best case would be up to 46,500, and the top of that red channel from March by the end of next month. Bitcoin is next, and here I suppose every day that we spend above 100,000 is a good day and a good experience. Decent consolidation, all above the 50-day line now at 99,000, and between there and the record high that we had around 109,000. Above 109, looking for the upper parallel of that April resistance line projection, as high as 122,000 by the end of next month. RSI in a good place, and just near 60, so not overcooked, so leaving us scope for a move to the upside. And we're also assuming that this is a mid-move consolidation ahead of a move towards the $120,000 area. Moving on to gold, which was used to be the old version of Bitcoin, store of value, etc. Here we've got the market finding support at post-October resistance around 2750. Above that, looking for the record high just through 2800 and hoping for 2970, maybe as soon as the end of next month, while we remain above the broken October resistance line there, 2720. Moving on to the stocks, and starting on with Borders, which has delivered us a near vertical rise in the recent past. A thing of beauty, really, one has to say. The current position is that we've broken the big target here, 4.3 pence. Above that, looking for a fresh move as high as 5.25 pence by the end of next month. Ideally, we stay above 4 pence while we're getting there. We've already had our golden cross, and the 4 pence level derived from that initial peak that we had at the end, or rather at the beginning of this month. On to Bezant, where it's been not a very pleasant ride over the recent past, but looks like the share's trying to bounce off the 0.02 area, and we've got the the 200-day moving average rising now, so that maybe that's a sign that we are heading higher. And then a weekly close above that 200-day line there at 0.024, and above that looking for, obviously quite simply, a retest of October resistance towards 0.04, but the key here, I think, is staying on the right side of 0.02. A stock which is doing but there's no equivocation at all, because done so well in the recent past, is Cell AI, and here you can see that we've got this market, or the stock rather, on going for the third target here we've got, which was around 0.58. Above that, obviously, we're looking 0.7 pence, which was the 2024 peak. Given the rise that we've had, near vertical rise over the recent past, one would probably now think that 0.7 pence plus and last year's peak, is the minimum on the upside, while we're above the 0.4 pence area. In fact, 0.37 the old peak, so hopefully there's no end of day close back below that. The other point to note is that we're just a few days away from a golden cross, and that tends to be the strongest part in the cycle. Interesting to see Catenai continue its recent revival after bouncing off the 50-day line, so squeezing people out, and then above the 50-day line there at 0.2 pence, looking for a retest of the best levels towards 0.4 pence. Maybe a bit more than that, given that the triangle I've drawn there is heading a bit higher than that, but I suppose that might be the angle of trajectory at the moment. The more time we spend above that 200-day line there at 0.22, the better that situation. Cora back from the dead as well, which is a sort of theme of my week and small caps this week. Here you can see that Cora has bounced above the 200-day line there at 2.2 pence above that. Looking for the shares to get back to summer 2023 resistance around 3.7 pence, hopefully as soon as the end of next month. Very strong into the week for the shares, opening at the low, closing at the high. Another stock which looks like an early bird recovery situation is E-Star. We have the gap higher back in December. Basically bounced off that area, 1.1 pence, and two strong candles last week suggest that maybe we can get up to the top of that rising trend channel base at 1.95 by the end of next month. If you're cautious, obviously, we'll just wait for an end of day close through 1.4 pence recent resistance. Moving along to Guild Esports, and here the picture of the rising trend channel base, looking for 007 there as the target versus 0.05 at the moment, and if we can get through that, then one would expect rather greater recovery up towards the 200-day line, which has been the peak for the shares over the past year. That's at 0.17 pence, but the key staying above that 50-day line, rising at 0.036 at the moment. Onto a stock which has got a very decent looking chart at the moment, which is IQE, and here a beautiful turnaround, W-shaped turnaround with a sort of saucer-shaped recovery on the right-hand side of that formation. We've also had a weekly close above the gap, so it's a gap close buy signal from October. 14.4 pence, the level there above that, looking for the 200-day line at the top of that rising trend channel base at 22 pence by the end of next month or even sooner. Great turnaround for ImmuPharma, and V-shaped bull flag rebound there for it, also bouncing off old resistance around 2.6 pence. We're in the run-up to a golden cross, which is only about a week or two away, and hopefully heading for the resistance line projection there from early 2023 at 5.1 pence by the end of next month. On to Marula, which I haven't looked at for a long time, and here you can probably see why I haven't looked at it for a long time, because we've been in a decline since March last year, but very strong end to the week last week, and especially on Thursday, breaking recent resistance around 4.8 pence above that, looking for the 200-day line initially at 6 3/4, and then up to the top of that broadening triangle there at 9.5 pence by the end of next month. Moving along to a stock which has had one or two bits of controversy attached to it, but basically ProBiotix gapping up back in October, and also with the current situation, we've got a rising 50 and 200-day lines, looking at the top of that triangle from 2023 as high as 12 pence by the end of next month. On to Pantheon, which seems to be benefiting from the drill baby drill slogan that President Trump is espousing at the moment. 55 pence, the fourth target there, I think, with a near term, and looking for that, hopefully over the next week or two, be gapped higher through the old resistance there at 45 pence, and hoping for the shares to deliver even more than 55 pence over the near term. Good to see some appreciation of Poolbeg after its American deal making. I've got a W-shaped reversal here. A breaker recent resistance of 5 3/4 could take the shares up to 8 pence, hopefully by the end of next month. M&A news permitting, of course. On to the last two. The first one is Zenith, which started its rally off with one of our favourite setups, which is a Bear Trap Island reversal. So we're gapping down back in August, and then gapping up in October, and then rising slowly along a rising 50-day moving average. It's a sideways shuffle, as I call it, over November, December. We've hit our third target now at 6 pence, which we did on Friday once again, and looking for a fourth target there towards 9.6 pence, hopefully by the end of next month or even sooner, the way things are going. The main resistance there was actually at 4 pence, so having cleared that very easily, it looks as though there could be much more. Obviously, best case scenario is 12 or 13 pence in Q1. Finishing off with Zinnwald, which also looks as though it's rehabilitating itself at the moment. Here you can see that we're just about to break, or trying to break out of a falling wedge there from back in September. Very good close to the week, opening the low, closing the high, so somebody keen on the shares there. And a bear trap reversal as well from below the December support at 7 pence. Initial target here around 8.5 pence, but big picture target, obviously the top of the range, towards 10 pence. But if you're cautious, wait for that break of that red resistance, September resistance line. That's it for me today. More updates tomorrow.